Good morning, everyone, and welcome to the European crossover webinar. And let's go and move in here. And we've seen the dollar trying to push up a little bit higher, but more importantly, look, we've seen the Australian pairs just come right on in and just dip right back. Just like one of the things that we looked at yesterday, and I was a bit surprised here on the Aussie dollar, was we had shown here we had resistance here at 69.45 here on the bias chart. We'll get to that. Excuse me, I'm still under the weather. So if you look here on the Aussie dollar, we had 69.45. I was surprised we weren't able to go in and challenge this. So it really shows here that some degree of difficulty here as we paired right back. And we've seen that really across all the pairs here. Well, let's take a look here with the Euro Aussie. And I'm still finding my footing here with this new okay, so here we are. Look at the Euro Aussie. And look how quickly we came right back. One of the things that, after I was able to get back into the Aussie, and some of y'all just kept on your Aussie pairs or whatever. I mean, talking about Euro Aussie. And I saw this rally back up in here. And as it did back, I didn't participate in this lower dip here because I was still cautious. I said, just give it another day or so. And wow, I'm surprised this thing really jumped up in here. And look how quickly we came back here. And we've run into gas right here or have some difficulty here at the 78%. So maybe we'll see, as we probably stopped out a lot of people on the way up here, they may have got short looking for a further correction. Now, we did have our trend line here, and it came to here and tagged that trend line right here basically on the pip. This would have been open for a little bit lower dip here, potentially. So this would have made sense. We come up here, we fail, come back. I think anyone here probably got stopped out. And now we'll see what happens. This is some pretty good resistance right here. Just coming, you can forget just the fib, but even right here coming across here, the 62.28. Excuse me. Like I said, boy, I guess I came over a cold, still haven't enforced, but developed some other complications with that too. So I'm gonna be going getting some care a little bit later on. But we have made a dip down here, and we actually had on our bias chart support, and we'll go and get into the news. We had here for 75. There we go. 75.98, and we made it down here so far to 75.62. Oh, really, really blasted down here. Boy, did we. But this was this area was previously like a resistance here. It finally took off. Well, now it's come back to be support. So we have really shellacked some of these paired pretty good. Hang on. So let's go and get on the main screen and cover the news, see what's going on, and we'll get on to the analysis. So morning bid Hammond rips up the Brexit rhetoric. Unusually strong language will emerge tonight from Britain's mild-mannered Finance Minister Philip Hammond, who, according to speech excerpts, will accuse some on the populist right of hijacking the June 2016 Brexit vote by advocating no deal. Hammond, who himself voted Remain, will argue to an audience of business leaders that the 2016 always promised a departure with a deal, and therefore there is no mandate for voters to leave without one. The backdrop in his attack is increasingly public maneuvering within the ruling Conservative Party to succeed Theresa May in coming weeks and months, with lines inevitably split down Brexit lines, ranging from a soft Brexit camp to a Brexit come what may faction. It feels like 2 steps forward, half a step back, an escalating U.S. China trade war, with investors fearing the tariff row is now morphing into an all-out tech war. After Washington's blacklisting of Chinese telecom giant Huawei has been ripple effects across chip makers, tech suppliers, and other U.S. digital companies that could be caught up in the retaliation by Beijing. But as if tailoring moves to offset reverberations on Wall Street, its operations in the U.S., with U.S.-sourced inputs that encourage some investors to feel the trade war will only get as hot as domestic U.S. stock market will allow. But the jammed effect of the Huawei move, Google's response on limiting the use of its services, and reports U.S. chip makers will stop supplying Huawei until further notice, compounded this month's rise in manufacturing tariffs from both sides, and suggests a durable trade deal between the world's 2 biggest economies that may have seemed imminent only a couple of weeks ago could now take months at least. But the S&P 500 shed about 67 tenths late Thursday, with the tech subcomponent lost 1 3/4. Tech-heavy NASDAQ also underperformed with losses of 1.5%. The technology fell, and Apple almost alone lost more than 3%. The slight row back from Washington overnight, and the tech-lead market was up 0.6 as U.S. and European futures regained some ground in a speech that gave little weight on monetary policy, even as markets have moved to price a Fed rate cut this year. Fed Chair Powell said it was premature to make a judgment on the effects of trade and tariff moves on the central bank's policy path, along with overnight recovering in stock futures and from oil prices that helped lift 10-year Treasury yields overnight. The dollar index rose to its highest in almost a month, with euro-dollar slipping and trepidation about this week's European elections and starting falling farther to a fresh month low after amid rising fears of a no-deal Brexit, as traders speculated about who'd replace UK PM May. On the European corporate front, one trader called an austerity drive at Daimler could help the German carmaker shares. It plans to cut administration costs by 20%, according to Handelsblatt. And on, pain in Asia pushes dollar to 2.5-week highs. Investors seek safety. Signs that Asia is already feeling the pinch from a trade conflict between the U.S. and China triggers from safe haven flows to the U.S. dollar on Tuesday, while higher U.S. Treasury yields made the trade more palatable. Surprisingly, soft economic growth from Singapore and Thailand have raised more worries that major Asian economies will be hurt by global trade tensions. Meanwhile, Asia's top policymaker Philip Lowe said on Tuesday, Australia's top policymaker said on Tuesday, the RBA will consider the case for lower interest rates at his June policy meeting, pushing the Aussie dollar lower 0.5%. The situation in Asia is difficult, in which shows the trade conflict hitting without further escalation, says Commerce Bank FX strategist Esther Reichelt. This is the main cause because the dollar strength, if anything, was a little bit surprised we don't see a more pronounced risk movement. It may have been also helped by the higher U.S. yields. The 10-year U.S. Treasury yield rising in 1 week high of 2.428%. Yields also rose as the government temporarily eased trade restrictions last week in Chinese Hawaii. And successful outing for right-wing Italian parties in particular could mean the new domestic policies, the Euro's largest economy, and potentially no coalition of right-wing parties led by Matteo Salvini's league that would be decidedly negative for the euro, because Salvini has been much less willing to abide by the EU rules. So we can see here cable's even taking a further dip. We'll start off with the euro. Pedro was asking about that in the chat room. And you can see here the analysis we have. It says euro continues on, well, that was that one once we got that didn't update. but the analysis have been from the basic technical analysis from this weekend, or not this weekend, but coming to the start of the week, was that 1130 is support here for the euro, and we had that on the bias chart here, and a daily close below 1130 would open the door for a move to 110 with a positive 1080. So it's 1130, nothing's changed so far, and the trend has remained down. But obviously, in a market like this, and if you're trying to sell near the lows, you have to look at your risk reward. So if 1130, we expect some support coming in here, well, you're risking a lot to only make, just a little bit here, unless your outlook is for much lower. So you're probably better off waiting for some type of a rebound and then selling into it. Unless, like I said, if you're expecting a break, which we could get a break to 110, but that's a daily close below 1130. I have to look at what your risk reward is. If you're looking for 110, well, then fine, you could go get short here and put a stop, wherever it's going to go to be. Let's say if you put it here at a daily close above 1236, but it's a little bit tough road to hoe when you come at that price. 1130 is still going to remain the same, okay? And on the upside, we had 112 even. And you can see right here, this 112 coming in right there. We'll actually make it right here for 1204. 1204. Oh. Well, let's take a look here at what we have coming in today. We do have New Zealand dairy prices coming in later on this morning. At 10 a.m. Eastern, we have 10 existing home sales, consumer confidence, Eurozone consumer confidence, flash, 5:45. We do have retail sales. And of course, for Japan Tankan report, that comes at 7 p.m. Eastern. Construction work done. There we go. And let's go and take a look at where we stand here with the cable. Well, we talked about this yesterday, this 127 being an area of support, although the market could still move lower. Cable continues its relentless fall, finishing the week on its lows. A value level comes in at 27, considering how oversold the market currently is. Beyond is 25.90, which is a 78% of the 23.74 to 33.81. Initial resistance comes in at 28.25. Well, we are pressing beyond here. Now, this is a value here coming in. Now, I say values, there's some good volume coming in there. So we'll probably find some bit of short coming. But like I said, you have to think yesterday's move higher here was a bit disappointing. If you look where the market moved to. So let's take a look here on a 2-hour chart. See if we can see something a little bit closer. Sorry about that. 26.75 right there. And actually just a hair lower there. Actually, there was a right there dip. See this here, right there? So it's going to be 26.68. 26.68. And as far as resistance, boy, this is unbelievable how weak this market's gotten. There's just simply no let up. Right now, be right there at 27.45. Unbelievable. Let's go put with this at 30-minute. Actually, I'm move this 15. There we go. And let's take a look at the Aussie dollar. Yeah, I wasn't sure how long that election results. I was thinking they're going to take it one of the two ways. Either okay, everything's hunky dory, or maybe it's a little bit overblown. The only thing that concern I had was I was surprised we weren't able to take a 69.45, even if we just took it out to hit some stops. So we typically have come back and given that way. Resistance got to be right there. Well, we have that 68.64. It'll be 68.64 for right now. On a short-term basis, that's going to be it. And it's pretty tight. 69.04. I mean, you can make the case up in here, but it really needs to break past this area before we can challenge. So it's going to be 69.04. Let's move on to the Kiwi. Well, we've gone right through the 65.17. Now we had that little, zone here, 64.96, 65.17. So we're gonna go with this little zone here, 64.96. And the resistance is going to be right there, that 65.74 that we had marked off in here. You can see that right there. We can take a look at it here on the intraday. Well, a long way before we get there, but it's going to be 65.74. Excuse me. Well, the dollar CAD is just hanging on here, hanging on. But to me, it seems like it's once again path of least resistance would be to the downside. Although it's done a great job of trying to hang on, but it seems like it would be lower moving in here. Here's that level that they went right to it before, 33.82. No changes in here. 33.90 and the resistance is 34.70. No changes whatsoever. The high, let's see, yesterday was 34.56. So no changes. It still remains the same here. Still bullish. And that's here on the daily chart. Look at that. Just not a whole lot of movement here. They're doing the best they can to hang on. There's our 33.90 and 34.70. And we're just trading as quiet as can be. Let's go move into the dollar peso. Well, we've broken above this trend line, this downtrend line, but we're just not doing anything with it. We actually even dipped back in here. Excuse me. And we've been on, for close to a week and a half, we've been on a buy mode in the exponential moving averages, but we're just not doing anything with it. The market's just kind of holding its own here. Almost biding time. Take a look at on the 2-hour. And we had 1905 and 1923. Well, we did make it down here. Oh, we did make it down here. We did. Let's see. Right there. So we did make it down there to the pip. 1905. Might have missed it by a half of a pip. And we'll come back up here, but the resistance still remains at 1923. It's 1923.6 right there. So there's your resistance. Just mark it a little bit higher above it, but so that's going to remain the same. We'll keep our bias chart support here at 1905 as we had before. Seems to have caught and held the market there. 23.6 is key for us to move higher. We just have not been able to get above there. On the short-term basis, we've broken below this, opened the door for this to move lower. We don't need this here anymore. This is the bigger trend line. So no changes here in the peso. Until then, we're just marking our time back and forth here. Next up, the dollar yen. Well, our analysis was, we got that close above 995, and I kept saying last week, don't get that close above 995 because you open up the door for them to challenge 1061 with a pause at 1031, which is 38%. Well, that's exactly where they went to. The 1031 here. The dip back took us to 981. And we're just meandering right now. Now, the only difference is our basic technical, we've opened up the door for 1061/80. See, 1062.80, which think that's a possibility. We got the pause. We talked about 1031. So resistance, I have to factor that in. So 1061. We did get the pause at 1031. Support, we'll keep that at 970. So no changes there. And we'll move into the cross rates. Euro still pushing a little bit lower towards that 1130. Sorry about that. Hang on. Keep on that euro. We're getting already down to 1142. Let's see here. This Kiwi yen has not been moving at all. We had 71.78. We actually have the opportunity now to move towards that 71.45. Um, and that's what we're going to have our support here, 71.45. And resistance. Hmm. Just going to go with that 72.06. 72.06. And let's go into the euro yen now. We had 22.44 and 23.62. No changes there on the 22.44 and 23.29. And let's go into the euro on. We saw quite the bounce back here off of this trend line, and we've made it up to the 78%. And that's a pretty good little resistance right there, too. So we're going to go with 62.28 for the resistance. And support. We'll go on the 61.88. 61.88. Very, very tight for today. Because I think what happened is we made this run back up here. This came up on Sunday, rally back up, came back down, came here. Now this would have seemed like, okay, this is perfect. You get short on the rally back up, and we're going to break to new lows here. Which probably would allow the market to come down here on maybe even 160, but like 60.25. Well, like they say, a funny thing happened on the way to Palladium. So we broke out here. We didn't quite take out these highs, but we broke out here, so it stopped a lot of people. This further stopped some people, and we just kept going in here as people were saying, well, this is crazy. It's still going higher and higher. So right now we knocked some people out. So now the market's kind of hold its own. We can make a quick dip below here, and we may kind of hang around. I don't think we're going to turn around and come apart right immediately. So let's see what we do here. But there's an opportunity for a little dip. And the euro's a little bit under pressure also. Also is odd, but euro's under some pressure for right now. We do have some resistance coming in. I mean, some support on the euro dollar coming in at 1130. So let's watch that. That may allow this to dip a little bit further. We shall see. And looking here with the Euro Kiwi. We did break above this 71.11 here. I'm sorry about that. We're still trying to push that here. Well, right there at that 71.50. We're going to go with 71.50 for the resistance. Oh, Rick was saying here, Paul, I see 61.88 is support for Euro Aussie. Yeah, 61.88. Let me go back. Yeah, that's it. 61.88. That's going to be support. That's what marked off. 61.88. It says it's been a line in the sand for some time now. Yeah, I think when you look at this, lots of times the Blake used to call that, the structure of the market. Well, I'm looking on a very short-term structure. So we came in on Monday, not Monday, but Sunday evening, and the market already been way down here before we got the open or the retail open. And then we rallied all the way back up, and then the market ran out of gas at 62 even, saw this dip, rally back, and that's what I'm saying. This opened the door for a nice dip to take us down into the maybe 60.25. And I think here we stopped a lot of people out here. Not a lot, but I mean a decent amount here. And then, but we hadn't taken out this area right here, 62. So this close here took some more people out when we went further. We ran out of gas right here at the 61.78, but also this is a very nice level right there, 62.28. So you saw the market dip back, make one more challenge here, strong challenge, and we dip back. I guess I think we'll come back down here towards the 61.88, potentially down here, which would take out this bar. And then we'll kind of probably sit for the next move, more defined move to develop. So there's a chance I think we'll take out this low here. How much further we'll dip? Maybe we take out 62, maybe we go to 61.98, or we come closer to 61.88, but I wouldn't expect a whole lot beyond that until, because I think you've knocked out some people out. They're going to wait and see what the market does. They go, okay, well, if we finally do dip, get past RBA, whatever, then I'll set myself up for the next move down. I just got myself stopped out. I mean, you have to put yourself in their shoes. That's what I'm saying. So if you're the one and you got stopped out, you probably say, well, I'm not going to come right back now. I'll wait. Let me see once we get past RBA. Then I'll see if the market's ready to set itself up for eventual move down here. And but like I said, they got knocked out. So we'll see what happens here. But that's the way to try and look at things is Blake is always good about that, saying put yourself in the other trader's shoes. There may be some people, I guess, are hanging from down here, but they probably wish they weren't. You know what I mean? Because then they may have their stops just above here. But anyway, getting back to the Euro Kiwi. So support now. Man, this thing's been way up there in the stars. We'll go with 70.41 here. And let's go to the Aussie. Well, we've seen, pretty big loss of all these, the moves that they had, happened. And so I think the market stuck like, well, okay, well, is it going to be see more follow through? Well, the support's going to come in right there, that 75.61. You can see on the importance of that big level there, the pink bar. And resistance, 76.04. 76.04. And starting yen. Boy, this thing is really taking a beating. Well, we put on here, they had that 39.95 confluence with 39.80 to 50%, additional support 79.12. Let's just go with this 39.50. 39.50. This is all a decent area right here. That's pretty key. We'll just put just a little bit lower. 40.21, which was support, is now going to be resistance. 40.21. You're on its lows, folks. Keep that in mind. 11.42, new lows on the euro. Sterling odd. Oh, hold up better. 84.29 for support. And 85.12 for resistance. There we go. And there's the bias chart. I'll get that posted in the room. Thanks for joining us here on the European Crossover webinar, and we'll catch you in the chat room.